Interest rates are rising, inflation is rising, and consumers are going deeper into debt to keep up with the cost of living. Corporate profits continue to decline with drops in consumer discretionary spending and increasing labor, energy, and borrowing costs for businesses. Michael Burry predicted all of these things in the past 3 years. This is why the World Investor has also been dropping different predictions as regards the present economy. He believes we're about to experience one of the most shocking cries and that the world is about to wake up soon. He worries about the recession and warns people to be very mindful of their dealings. Indeed, his predictions have been coming true, and the worst collapse in decades has now started manifesting. The current chart has left many in a shocking situation. Just like Burry says, this is the start of what we can call a much more terrifying crash, and he believes that we're still far from what we expect. So, we should expect more to come, just like what happened to the economy in 2008. Even if we don't talk about the current inflation, what about the massive financial collapse prediction we might encounter very soon? So, how does Michael Burry know these things? Well, that's what brings us here again. In this video, we'll look at Michael Burry's worrying recession warning, so watch this video to the end because there will be much to cover. Also, remember to subscribe to our channel and click on the notification icon so you can stay updated with our videos. In 2020, Michael Burry started warning about the high inflation due to the COVID-19 lockdowns, government spending, and central bank policy. As of 2021, he saw the everything bubble and warned about the coming stock market crash and financial crisis in the markets. He also warned about inflation when most central bankers and politicians said it was transitory. He warned of the coming stock market crash near the peak run-up and maximum bullishness. In one of his tweets, he said, "I showed up here in 2020 at the beginning of the pandemic to discuss COVID. I then predicted inflation on COVID's end and warned about the effects on kids of shutdowns. In 2021, I warned on the all things bubble. Don't recall calling 8 of the last 10 crashes recessions." Michael Burry also claims everyone will be terrified, and the first reason is that inflation is on the verge of returning in a frightening manner. The Federal Reserve is firm about raising interest rates to fight inflationary pressures. But just recently, the CPI has been decelerating. This means there is a slowness in inflation, and when inflation slows down, disinflation occurs. This has got people thinking that disinflation is a result of the Fed's rate hikes. However, Burry believes that disinflation is just a result of human behavior and that inflation always appears in spikes. He said, "When the spike is resolving, it won't be because of Biden or Powell. It will be because that is the essence, the nature of inflation. It resolves, fools people, and then comes back. When it comes back, neither the POTUS nor the Fed will take credit." We should be aware that a lot of corporations across different industries and sectors are laying off an average of 10 to 20% of their workforces. These unprofitable companies hit the worst because they have to slow their cash burn rate in this high cost of debt environment. Also, service-based companies are focusing their layoffs on their home, office, employees, and workers that work from home. The layoffs are occurring primarily with white-collar workers that are not closely connected to a company's bottom line. Michael Burry also predicted this. He tweeted, "I see a bifurcated labor market developing as unskilled and semi-skilled remain in short supply, but white-collar workers, having proven their redundancy during COVID, will find gross success in the labor market, pressuring wages at the end." Since he predicted the financial collapse, he has been worrying that the present market chaos may be the beginning of a much worse thing to happen. He probably meant the Federal Reserve and other central banks rapidly boosting rates to tame stubborn inflation. The unfortunate thing is that due to the Fed's aggressive rate hikes and external factors like the Russia-Ukraine war and China's ongoing lockdowns, the US dollar has reached record highs versus other foreign currencies like the British pound. Also, the Bank of England started a 70 billion bond buying binge because rising gilt yields threaten the UK's financial stability. So, in a view to support the Chinese currency, the People's Bank of China is prepared for state-run banks to sell dollars and buy foreign yuan. There was a lot of inflation spike, and after the first one happened, there will be a second, larger one. During the first inflationary crash, there is every tendency that the economy will collapse. As such, it makes the government begin to print more money again in order to save the economy, without the government knowing that inflation will come back growing again in a terrifying fashion. Goldman Sachs analysts said current market levels have only priced in a minor recession and warned that a sharper stock sell-off is still possible. Much of the valuation derating has been due to higher inflation this year. According to Bloomberg, unless bonds yields start to decline and buffer rising equity risk premiums due to recession fears, equity valuations could decline further. The bank's strategist also predicted that corporate earnings might suffer in the year's second half due to higher costs and slowing consumer spending. Let's face it, Michael Burry sees white-collar jobs as more vulnerable than blue-collar jobs. He has also doubled down on his opinion. He tweeted, "The white-collar employment bubble is bursting right before our eyes, and the longer it takes the redundancy to disappear, the more permanent the decline in employment will be." Michael Burry doesn't only see a white-collar job recession on the horizon. The chief economist at the Milken Institute, William Lee, was interviewed by MarketWatch on exactly this topic. He said, "It will be mostly a white-collar recession, and the blue-collar recession will not be in the same place we saw in the past." Many other companies have also announced hiring freezes, and others have closed open job position postings. This year alone, companies are finding different techniques to use technology, all because they want to lower the number of needed workers. Well, this is a smart move, as the labor cost has increased dramatically in the past 3 years, along with a shortage of workers in many companies. Of course, no one should tell us that increasing unemployment is a major sign of a recession, and so far, these numbers have yet to show up in the jobs report. This means employment tends to peak later after the economic decline has begun, but high unemployment may continue deep into an economic recovery as it is a lagging indicator. The end of the recession marks the bottom of the economic decline and the start of an economic rebound rather than a quick end, and it takes time for growth to return after a recessionary cycle. But do we think the stock market will recover before this year comes to an end? It's almost impossible for the stock market to recover its losses in 2022. This is because nothing has changed yet in the fundamentals of global macroeconomics and the Federal Reserve's rising interest rate policy. With the ongoing issues inside the global supply chains and heavy government debt loads we can see most Western countries still suffering from, it will not be a favorable economic environment for stocks for the foreseeable future. We can only hope things get better. And that's it for today, guys. If you enjoyed this video, do well to subscribe to our channel and give this video a like. Thanks for watching. See you in the next video.